to the halfway point for the morning. We are now going to be exploring new ways to invest in NFTs. Who would have thought? Well, you're about to find out in just a second. Now, we have quite the panel with us, and a good friend of mine as well is on this panel. So, one by one, we'll introduce Farbod, Tony, Frank, Karl, and finally, definitely not least, Omar. Please welcome him on stage.
Okay, not quite.
Go, Omar.
So, where shall we start? Yeah.
Hello. Excellent. So I'm Omar Yehia. I'm here to moderate the panel, and we're going to talk about general investments in NFTs. And by NFTs, we're going to define financial instruments, digital art, music, and this will be a good point to remind ourselves what it means to invest in something. There's really one function when you do a financial investment, and that's to make money. And the reason why it's important to note is because there are ulterior motivations or reasons to invest in a particular instrument. But if the financial aspect of it is not clear, especially when you are a fiduciary or you're responsible for allocating capital, it becomes difficult to track progress and, more importantly, success. So when we talk about investing in NFTs, we really talk about how to make money deploying capital into NFTs. So without further ado, we'll introduce everyone on the panel, and then we have a few series of questions that we're going to go through. We'll start with Anthony.
Hi, everyone. How's it going? My name's Anthony. I'm editor-in-chief at New Street. We're building a media and data brand around collectibles. Collectibles meaning physical and digital cultural assets like NFTs, sneakers, trading cards. My background, worked at Facebook for quite a while, worked in blockchain, startups, a few different things. And yeah, one thing actually I might add, if you don't mind, Omar, but I think one slight difference with NFTs and some collectible assets people buy is that sometimes people buy them for purely emotional reasons, and sometimes the financial benefit is like a potential side effect of that, but not always the main reason, but just something that maybe adds to the discussion a bit. But thank you all for being here.
Thank you, Anthony. My name is Frank, everyone. Welcome this morning to listen to our panel. I am an investor in angel round mostly, and I used to invest a lot in fintech and some technology companies and gaming industries. I also run a game studio, in which we have over 500 members in our team in arts and design, development, and all kind of things around. So we kind of started our journey into Web3 by making games and NFTs, which are our specializations in. So yes, that's kind of what I am.
Thanks, Frank. Also, good morning, everyone. I'm a co-founder of Web3 Studios. We're basically building the investment banking boutique for Web3 and crypto companies, so basically supporting founders whenever they want to exit their business or go into later stage fundraising. In my previous life, I was basically spending time on the dark side of things, working for the largest US investment firm. But now, you know, on the private capacity, also still investing heavily in the NFT space.
Thank you. I'm Farbod, founder of RTQ. We are investment capital investing in digital art and collectibles. We have created our own token that actually represents the share of our capital, and we enable museums and galleries and everyone to move into the Web3 and creating their own NFTs. And what we have been doing last year mostly is bringing NFTs and digital art as bankable assets that the banks would accept it as underlying asset. And today I will talk a little bit about the challenges over there.
Great, and maybe it's worth mentioning as well, we have an early stage venture firm. We invest across all asset classes related to digital assets and fintech. We're particularly interested in scaling primitives, NFT infrastructure, a lot of infrastructure plays in general. We think there's ways to go when it comes to first recognizing primitives that are going to enable new types of content and new types of financial instruments, and the primitives that are going to be needed to essentially onboard tens or hundreds of millions of users onto these networks sort of simultaneously. In relation specifically to NFTs, we actually have a very strong bias towards not just digital art, but also financial instruments in general. We think that there is a new sort of wave of dormant financial primitives that had existed for a long time in traditional markets, but that haven't been utilized either because of structural reasons, so regulatory concerns, lack of transparency, lack of secondary venues, lack of standardization, which if you were at some of the previous talks this morning and yesterday, you'll see that one of the beauties of introducing standards on these distributed ledgers is the ability to essentially solve most of these problems sort of simultaneously. You get that for free. When you talk about a non-fungible instrument in general on a blockchain, all of, or almost all of what I mentioned, you sort of get for free. So it's a very interesting starting point. So with that, let me ask our panelists, what is the most interesting NFT vertical, both from the building side and from the investment side, because we have a mix of both on the panel. And by vertical, I mean music, financial instruments, digital art, etc. And we can take it in any order.
Okay, for us, the experience started with digital art, and we were lucky to be able to collaborate with a museum called Belvedere. We brought a painting, Gustav Klimt, The Kiss. We turned it into fractional ownership. It was one of the most successful museum projects. The sales value was over 5 million in 2 weeks. We see the digital art connection to traditional art and the NFT ownership with the traditional art, one of the most compelling movements that we have felt. But in the last 6 months, we see that the collectible market for us as an investment capital has been much more interesting. We are looking at collectibles that they're over 100, 120 years in 3 generations that people are collecting. We are enabling the move of those type of collectibles into the NFT and the ownership. And the co-ownership of paintings, traditional paintings, that we are moving into the metaverse and the NFT field. For being tradable asset, we have applied for ISIN numbers per each piece. We see the challenge of the digital art market or NFT, mostly that whether is a bankable asset or not. And when we say bankable, that can I go in the bank and put my Gustav Klimt pieces or Picasso pieces that I bought, even if it's fractional, and I can get a loan out of it? Can I use it as an asset against my whatever credit card in the bank? That's what we have been doing the last 1 year, 1.5 years, and now we have achieved it through ISIN numbers. That is like a normal security register number, and we are evaluating those as per the market price. It means there is a live panel for the banks available that they can see the live price. For us, I cannot talk for the other branches, but for us, the traditional art movement into the NFTs has been most successful and lucrative so far.
Yeah, maybe tackling this point from a bit of a different angle. We obviously speak majorly to the larger institutions, those are financial institutions, payment processors, or the big tech companies. And so what they ask us for, basically, in terms of acquisition targets in the market, is really anything that is a second level derivative of sort of the underlying technologies, which is NFTs that could represent, at the end of the day, pretty much everything. So everything that touches tokenization of real-world assets, and so for some extent also data analytics platforms for NFTs, like who has the best data, who trace wallet infrastructure. So those, the infrastructure layer for, let's say, the larger big tech companies, I think is still somewhat unsolved, and a lot of people are out there trying to tackle this. And so very excited to see what's coming out there.
Thank you. So for us, as I said, we are a game studio, so the most interesting for me is definitely the games. And myself as a gamer, I play a lot of games, and I think games are the easiest adoption, like of group of adoption that can get into Web3. And as we can see, the start of Web3 coming from cryptos and then NFTs and then GameFis. So we're thinking like games contains a lot of features of Web3, like community, in-game items, which also involves ownership and the verification of ownership, and transfers and transactions, all kind of things that you can find in games. So we are looking at a lot of games, and the one thing I want to mention is like, I felt there is a lack in the GameFi industry, that the game are not fun enough. So we're making games based on game itself. We focus a lot on gameplay itself, how to make a game interesting and how to make people enjoy the game while at the same time making some extra income from it, but it shouldn't be the only focus of games. So yes, I would say game.
Well, before we move on, let me ask sort of a clarification here. As both an investor and a builder, how do you, and you've already made this point observation that a lot of the current GameFi ecosystem is built around games that aren't sort of fun to play.
Yeah.
So how is it that you as a builder make your enterprise more investable, so it's more appealing from a financial perspective, not just to the gamers, but then also people who see there has to be something interesting about these sort of Web3 type games that don't exist in Web 2?
So I think that one thing different is the earning bit, or the crypto bit, or the on-chain bit. In Web2 games, traditionally, they are items or they are assets of the game development company, not the players or the gamers themselves. And in Web3, we kind of like amplified that aspect. So everything you earn or everything you created from the game, that belongs to the gamer itself. So we're thinking it's kind of a long-term thing. Then the design of the economic system or the game mechanism itself should control the economy or the assets in a more realistic level. Because most of the games are in a very high inflationary structure, which we thought it's, I mean, in real world, it's lacking some controls over that. So we're thinking like that kind of control will make a game project more compelling, or like a more long-term projects itself.
Okay, beautiful. Anthony, back to you.
Yeah, I was going to say, perhaps in contrast to everybody else in the panel, I was going to say PFP projects. You know, essentially we have the creation and spinning out of mini cults and brands, and while a lot of them are pretty shit and are going to fail, you're going to have companies, whole franchises that are built out of something like Bored Apes or Clonexes, Doodles, et cetera. I think that's particularly interesting because sometimes people do that not just because they want to make money, but sometimes it's the friends they make along the way. You know, I see someone in the audience I met at a Clonex meetup the other day, and sure, were we talking about the floor price when we met? Of course. Were we talking about what we could do to contribute to the community, maybe spin off some things? Yeah. But also, we were just having a good time. I think sometimes people really want that connection, right? That's why someone buys streetwear. That's why someone buys one brand versus another. And I think if you look at these communities as more than just silly, cute things, but actually something that could evolve into the potential, like let's say IP franchise, maybe they could spin off their own investment funds, look at things happening like with Nouns, Bored Apes, et cetera. I think that's really exciting. So for me, that's what I think is the most exciting thing in the NFT space.
Okay, well that's a good transition to something you're going to talk about later, but now maybe we should just bring it up. There's this question that I tend to ask a lot of people, mostly because it's sort of, I don't know if there's a clear answer to it, but I also think it's an interesting sort of focus. It's this idea, when you're investing, you're really looking for markets, and you have to think about like the structure of the market, the history of the market, and how it sort of functions, what the rules are of the game. But what we've seen, and that's what Anthony was referring to, is this emergence of a culture. We'll call that the meme culture in sort of NFTs or in digital art in general. And now I'm going to ask the classic chicken and egg problem. Do markets create memes or lead to the generation of memes? Or do they require the pre-existence of memes? So does a meme lead to a market, or does a market lead to a meme? And then Anthony, I'll throw that back to you because you seem excited.
Sure. I don't want to hog up the stage because I could talk about this shit for hours. So, okay. I mean, I think culture creates markets. So first off, take a look at traditional markets for a second and look at people like George Soros, Paul Tudor Jones, or maybe in more recent examples, someone like Chris Camillo from Dumb Money, whose whole sort of investment strategy is like social arbitrage, right? Now, basically, what those people I mentioned were doing in traditional markets and still do now is making assessments of what they should invest in, not purely based on analysis of like a balance sheet or value investing, but on things like reflexivity. It's like how people react based on what I buy. What's the game theoretical outcome of someone wanting to buy this or something being scared, shorting a company, et cetera. I think what you have at a retail level is through things like deep fucking value on Wall Street bets, Elon Musk basically being like a cult hero, and that's why people buy Tesla. And then you get to the point you have crazy fucking NFTs, like literally like crypto dick butts or Goblin Town, floor price going crazy and people buying them. I think you have this moment where people, particularly retail investors, I think I'm gonna put aside institutional investors for a second, they are seeing these things the same way that someone might be interested in buying, let's say, a Pokemon card. So what we do at New Street, we cover things that range not just from NFTs, but also other cultural assets like Pokemon cards, sneakers. And why I think that's interesting is because what that's taught me, at least personally, it's an opinion, happy to debate it, but the reason someone buys, let's say, a Charizard card is because partially they realize, holy shit, like Charizard cards have outperformed like the SP 500 over the last 5 years. But at the same time, someone might buy a Charizard card just because they fucking love Charizard or they love Pokemon. And to them, the feeling of holding that, the same way they might feel about holding a Steph Curry card, LeBron James card, Yeezys, maybe not Yeezys right now, but like Air Jordans, whatever, it's partially financial but partially emotional. And I think what you have right now is this like ridiculously crazy marriage between culture and finance in a way that's never really existed before. So now, easier said than done. I mean, I don't have the playbook to create the next Bored Ape Yacht Club. But what I think has happened is that we've seen case studies over the last year, like Bored Ape Yacht Club, like CloneX, like Doodles, et cetera, where it's been this sort of cultural infiltration that has created a market rather than the other way around. I could keep going, but I'll pause for a second.
Brilliant. Frank, which one is it?
Unfortunately, I have Goblin Towns. I still have some, and I have a rare Charizard card.
Nice. Oh, we can be
So,
friends.
yes, I'm collecting a lot of things like that. But for me, I think actually culture creates the markets, where like we come into something that we both liked or like we both enjoyed with, and it's kind of like maybe it's no value, no market value at the moment, but we come into together, we're gathering with others like with same interest or same field, like same interest of fields, then maybe we're thinking like, oh, we should do something together, or like we should create something based on the things we both liked. Then that creates the market, that creates a demand. I still believe the highest level of demand is starting from when people not even recognized it. So yeah, I think actually culture creates markets.
Carl, what do you think? Memes create markets, markets create memes.
Yeah, I think it goes both ways because, I mean, what is a market essentially, right? It's two people wanting to own the same asset or so. And I think the really interesting part we have with sort of, I mean, first of all, token projects or also NFTs that have liquidity way earlier than we are used to in the traditional markets. So you get to a point in your business life cycle much sooner to also incentivize other people to contribute and share that culture with others, which, you know, all of the NFT projects are heavily benefiting from. If you at day 1 or day 10 have 10,000 supporters that are spreading the word for you, that's something we have never seen really before. And I think traditional financial markets also need to adapt to it. And that's why community management is probably the biggest change that everyone is still sort of fighting with or trying to understand and win over. So I think there is, it's a bit of both. So definitely also the market aspect helps driving the community and the culture and it's flourishing it basically in a good relationship, I would say.
Farbod, thoughts?
Okay, yeah, I would actually agree. As a both side, I see it also as a market and also the creators. Both are enabling. The matter that, which Tony was saying, the ownership of it, that aspect, it's give a great feeling that it's I would say, very much emotional, the part, and very much as an investment. And the second one is like having the aftermarket access, which before was not existing. If I would collect, in my age, we were collecting a lot of football cards or NFL cards or others. It was really tough to sell them or to exchange them. If you had 2 of a card, you needed to look into your friend group in the school. Now it's much easier that it's emotional. I have two of them. One, I want to put it on the market. It works faster. But I always say we shouldn't forget that we are talking about type of art, and the emotions is the most important, because we see a lot of projects, they say, I bought this type of art and the price is not growing, and or this mem. And if we go back to the normal market of art, everything takes years. And why we are expecting to buy a piece of something and we have like a 500% growth on it, the emotional part of owning an art piece and enjoying it, or enjoying the creation of it, that's the part I think a lot of our investors sometimes are nagging about it, that the market is not that good. I feel totally different. The emotional aspect of owning an art piece or a creation, that's the most important part that we are exploring now.
Okay. Which brings us to sort of our last question, which you alluded to, this idea of the existence of secondary markets for NFTs. Which I personally think is absolutely fascinating, both from looking at the building blocks, so looking at the cryptography that enables you to do this, but then also the global distribution that you get from having, you're essentially using very simple UI, UX frameworks to have millions of people access hundreds of millions of dollars worth of value in a way that anybody could bid for these assets and anybody could create these assets. So what, and in general, secondary markets are at the heart of financial markets in general. Primary issuance is interesting to the extent that you can find buyers and sellers later, and it helps you value the asset, right? People talk about this idea of price discovery, and that's what secondary markets enable us to do. So very briefly, what today about the nascent NFT market is lacking in terms of secondary venues, do you think? And we'll start with you.
Yeah, the secondary market, as I mentioned a bit, this is there's the projects that they are showing up with the whole whitelisting process and everything, that the people go extremely excited about it only as an investment, and there's no emotional values in those. I see they are blocking the aftermarket or failed aftermarket for a lot of projects, that the investors look at it differently. The other part is that being unified as like creating, you never buy an art just to, you have bought it, you need to like it. It's not a pure financial instrument. And I think the emotional part in most of the platforms that they exist even at this moment, one is that digital assets are still not bankable assets, which what I was talking before, that we are trying to do that, creating it, because somehow I need to get something out of my investment. And the matter that I'm not selling it or the aftermarket doesn't exist, it doesn't mean that I lost something. I still own it, I still have it, the time will come. But the point is that the platforms need also to offer more as an emotional part of it, having our collections presented differently, having a collection being able to beam it somewhere, to stream it somewhere. I think it's too much on trade on the aftermarket platforms, that I would say if we change it as a UI UX, it would improve a lot to give the emotions to the people.
I think before we move on, an interesting distinction that you made is the subjective versus objective utility of some of these NFTs. When you look at traditional secondary markets, and we're talking about, say, you're purchasing a bond or you're purchasing the equity in some company, the underlying assumption there is that the asset is completely fungible, both in terms of its characteristics and in terms of its utility to the holder of the asset, right? It's valued as a simple discounted cash flow. It's going to give you some dividends. You can sell it because it's a sort of claim on a portion of the balance sheet of the company. But I think what you're suggesting is that there are certain cases in which there is subjective utility. So a person can buy an NFT, and this could have some monetary value to him or her without the existence of a secondary market, which is interesting, right? Because now we're referring it to more as a commodity. For example, a barrel of oil is useful to the holder of a barrel even without the existence of a secondary market at all. Why? Because presumably they can use it to sort of power their vehicle, assuming it's refined, of course. You don't want to put crude oil in your car. But does that sort of make sense?
We see it also coming up with wine, with whiskey. There are things you need to own it. The NFTs enable you, the holding it, the emotional part. And as I mentioned, everything, what we see, it's a kind of art. Some creator is behind it, and the emotional part needs to be increased also in the platforms.
Carl, what do you think?
Yeah, so I mean, I as a finance guy get particularly excited about sort of what's next in terms of financialization. And I mean, we've gone a long way on simple secondary trading, and from 17 only OpenSea. Now I think we have amazing protocols out there competing for each other. So I mean, I think I'm very bullish that we solve this whole secondary trading issue. But then the step beyond that is, okay, how do I lend my NFTs? How do I generate yield on NFTs? This is where a couple of protocols have made a huge success now, and hopefully drive sort of that vertical. Then even more options on NFTs. So there are so many things we can still do or take from the traditional financial markets and apply those to the NFT space, especially as we grow in use cases for NFTs beyond art or community projects and tokenize real world assets. So that's where I'm spending most of my time and get very excited about.
Frank, thoughts on secondary markets?
Yeah, I think we're coming to an agreement on the here. Like NFTs need to have some user case and also the true utility behind it. So when we're talking about an asset, a real asset, it either gives you a privilege of some sort of ownership or utility, or it gives you kind of an expectation of valuation appreciation. So we're talking about secondary market, we're talking about liquidity and the transactions in it. Why they're lacking transactions or liquidity there, it's like for the subjective utilities, they may be kind of like available for one user, or it's kind of like a very, very personal thing in it, but it doesn't mean that is at the same level of interest or valuation to others. So the second thing is like, then if that's the case, then how the common value of an NFT or an asset should be agreed in the market itself. So I think the true utility behind an NFT or behind a blockchain technology is actually the key to boost it up.
And so again, you're making the distinction between how to price the sort of objective part of the utility,
Exactly.
and then how to think about the subjective part of the utility separate from a secondary market.
Yeah, so it's more about valuation, how to evaluate, because like subjective utilities are not like cannot be capitalized into it.
Right. Well, just before this panel, we had a very nice talk about how to price the objective part of NFTs. So I think the panelists might be still in the audience. So, Anthony, thoughts on secondary markets?
Yeah, I think what we need is something like a Bloomberg terminal for secondary markets. A place where we can do price discovery, a place that aggregates marketplaces every single day. I feel like a new marketplace opens up that I haven't even heard of before. That's something what we're building at New Street, a marketplace aggregator, trying to take inspiration from Bloomberg. Because also I think a world where pretty much if you believe in the concept of Web3 and NFTs, and you think that the ceiling is very high, I could see a world where, let's say, every single sports team in the world has NFTs. Every single musician releases NFTs. We're going to tokenize everything around the world, ranging from real estate to sneakers to whatever, and you'll have more assets to onboard into whatever that Bloomberg terminal is, whatever, schemorphically, some sort of Bloomberg terminal in the future. But I think also, to this whole sort of point about culture, what our philosophy is at New Street is that I think we want Bloomberg mixed with MTV. Because a lot of what NFTs come from is culture. So it's not just about like having some old white guy in a suit like pointing to a chart up and to the right, this is the price of an NFT, but it's about trying to understand why people are actually buying these stupid lizard pictures or whatever. And maybe it isn't stupid. Maybe it represents something to them. Same way someone might buy a Pokemon card or a baseball card. So to me, I think sort of aggregation of marketplaces, price discovery, and this whole sort of Bloomberg terminal concept, whatever that might mean in the future, is something that we need in the secondary markets.
Beautiful. So just on time, all our details are on the landing page for NFT.London. You can contact any of the panelists. We have our Twitter handles up there, our firms, and so on. And with that, we'll thank our panelists, and thank you all for being here.
Thanks, Omar.
Thank you, Omar.
Thank you.
Go on.